Everyone, welcome to this video on accounting and the public interest and how the AICPA's Code of Conduct and the IMA Statement of Ethical Professional Practice can help accountants through ethical challenges. After reviewing the AICPA and IMA guidance, we'll analyze an example together. First, let's talk about the AICPA, or the American Institute of Certified Public Accountants. It's a huge network, over 431,000 members in 130 countries. These members include CPAs working in everything from business and industry to public accounting, government, and education. And even though each state licenses its own CPAs, the AICPA Code of Professional Conduct is widely recognized as the go-to standard for ethical behavior. The big idea here is that the primary responsibility of CPAs isn't just to their clients or employers, it's to the public. That means accountants need to exercise sensitive professional and moral judgment in every aspect of their work. The principles in the AICPA code state that members should accept the obligation to act in a way that will serve the public interest, honor the public trust, and demonstrate commitment to professionalism. Accountants, even if they're not members of the AICPA, should act with integrity, be independent of clients, make decisions objectively, exercise due care, and maintain professional skepticism. The AICPA code is split into two sections, principles and rules. Principles are the high-level aspirations, things like integrity and objectivity, and they're not legally binding. On the other hand, the rules are specific and enforceable, guiding CPAs through situations where ethics come into play. Some of these principles are things you'd expect, like, for instance, integrity, meaning always being honest and straightforward. Other principles are objectivity and independence, which means keeping personal biases out of professional judgments. And due care, meaning striving for the highest quality in your work and continuously improving. One aspect of due care is continuing education, and CPAs are required to take continuing education every year, ensuring that they stay on top of industry trends and maintaining the quality of their services. In California, that's 80 hours of continuing education every 2 years. 20 of those hours need to be in technical subjects. Not a small task, but definitely necessary for keeping up with the fast-paced world of accounting. I only talked about a few of the principles, but you should be familiar with all of them. CPAs must exercise sensitive professional and moral judgments in all activities, whether test services or tax and management consulting services. But I can't repeat it often enough. The responsibility to the public overrides the responsibilities to the clients or those who hire and pay them. The public interest includes those who rely on financial statements for lending, investing, and pension decisions. CPAs must continuously develop themselves and maintain and increase their level of competency and quality of services. It's really interesting how closely the AICPA's standards align with Aristotle's virtues, values like honesty, integrity, and impartiality. These virtues line up pretty well with the core ethical standards for CPAs. It's all about doing what's right for the public while maintaining trust and fairness. Next, let's look at the IMA, the Institute of Management Accountants. With over 125,000 members globally, the IMA supports accountants in business. They have their own statement of ethical professional practice, which emphasizes honesty, fairness, objectivity, and responsibility. IMA members also need to uphold competence, confidentiality, credibility, and integrity. And yes, failure to meet these standards can lead to disciplinary action. The IMA also gives a useful framework for resolving ethical conflicts. If a member faces an ethical dilemma and the company doesn't have policies in place, the IMA suggests speaking with your immediate supervisor. If that doesn't work, moving up to the next level of management. The IMA also has an anonymous helpline if you need more guidance. Consulting with a lawyer to understand any legal implications, and if all else fails, considering leaving the organization. Now let's put these codes to the test with a real-life case, the 3D printing dilemma. This case involves a private company that has just completed its first year of business. The company, founded after a successful Kickstarter campaign, is preparing its financial statements for the fiscal year ending September 30th, 2021. The CEO, Kyle, wants to recognize $200,000 in revenue for a sale that hasn't shipped yet. The CFO, Madison, who is also a CPA, disagrees as this violates generally accepted accounting principles. The conflict: Kyle wants to include the revenue in this year's statements, but Madison knows that proper accounting requires the product to be shipped before recognizing the revenue. Let's look at how this situation unfolds. Kyle says, Madison, you have to include the $200,000 from A1 printers and revenue for this year. Madison responds, I can't. GAAP requires at least shipment of the product to A1 as of September 30th. Kyle says, you know, we will ship the product in 10 days. What's the big deal? And there are a few more comments here. Madison says, I understand and don't want to be held responsible for missing our targets. So it's better to take the hit to earnings now and record the revenue next year. Kyle, I'll worry about next year. Madison asks, has the board of directors approved this? Kyle says, don't worry about the board. At this point, the meeting broke up and Madison was told to make the adjustments and include $200,000 of revenue this year. The last thing Kyle said to Madison was that she's expected to be a team player. So what should Madison do? Let's break this down using the AICPA code. What should Madison do in terms of objectivity? Madison's decision should be based on professional standards, not on pressure from Kyle. She knows the right thing to do is to follow GAAP. What about Madison's integrity? Madison must maintain her professional judgment, even if it means going against Kyle's wishes. If she gives in now, it might set a dangerous precedent. Next is due care. Madison has a duty to make sure the financial statements are accurate and reflect the true state of the company. She has to think about the long-term impact on the public, investors, and creditors. Looking at it through the rights theory, Kyle is promoting the ends justify the means approach, trying to manipulate the financials to meet external expectations. But the public interest, in this case investors and creditors, deserves accurate, truthful financial reporting. Finally, justice theory is about fairness. What's fair here is that Madison upholds the company's ethical responsibility to stakeholders by following the rules, not just doing what's easiest. As a CPA who has worked for many companies, this case could have had a far better outcome. The entire situation was poorly planned and prepared for. In most organizations, an important order of $200,000 would have been discussed far in advance. Perhaps the customer could have accepted shipment before the financial close. It is the CPA's job to be well informed about customers' revenue, costs, as well as the banking relationship. This should have not been a surprise, and Madison and Kyle should have collaborated on finding solutions without ethical conflicts. But now, Madison has to stand her ground and do what's right, even if it's uncomfortable. So what should Madison do? She needs to stick to the ethical standards and refuse to recognize the $200,000 in revenue. If that leads to personal or professional consequences, she may need to consider other options like finding a new job where ethical standards are respected. I hope you enjoyed this video about accounting and the public interest. Remember that public interest in maintaining integrity in your professional work should always come first. whether you're an accountant, a manager, or anyone in a decision making role. Stick to your ethical standards, and you'll always be on the right track.